In this slideshow, we want to talk about taxes and their effect on equilibrium. So we begin with our standard supply and demand chart at equilibrium, and we see our buyer surplus and the seller surplus. And the question is, we're going to impose a tax on the seller, and in that case, it will shift the supply curve up by the amount of the tax. So let's assume that we impose a tax of 40 reals. What we'd have is that supply curve would shift up or to the left by 40. So we can just count up 40, and our new supply curve would be at this location, and our new equilibrium then would be at this point with a price of 70 and a quantity of 3. Now what we're interested in is how much tax revenue is generated in addition to what happens to all the surpluses. Well, we're going to draw a little line there as well in our producer surplus triangle, and we'll note here that before, both the buyer and the seller sold for 50 and the buyer paid 50. In this case, the new price is 70. That's what the buyer is going to pay is 70, but the seller is only going to receive 30. The difference, that 40 real difference, is going to be the tax. Let's kind of see how this works out. Let's just label our boxes A, B, and C, and D, E, and F. Now what happens with C and E? We note that those will be deadweight losses. Those go away. The other area we're interested in is B and D. This is the actual tax area. Remember that we have 3 sales and at 70 apiece. We know what our total revenue is, but at the end of the day, the government will come in and collect that tax of 40 reals per sale, or times 3, we end up with 120 in taxes. So that area, the B and D area, actually will be paid in taxes. So now let's look at what happened. The buyers lose C to deadweight loss, and then they lose B to taxes. The sellers are going to lose E to deadweight loss, and then lose D to taxes. We summarize this. Also, the government will gain B from the buyers and D from the sellers. This table here would summarize what our before and after conditions are. Does this make sense? Once again, B and D, those two areas, are removed from the surpluses, and the government now receives that in the form of taxes.